Bitcoin, everything you need to know. Bitcoin is more than just a digital coin. It's a technological revolution, a monetary experiment, and a global movement rolled into one. Since its mysterious creation in 2009 by the pseudonymous Satoshi Nakamoto, Bitcoin has evolved from an obscure idea into a trillion-dollar asset class, challenging everything we thought we knew about money, trust, and financial freedom. At its core, Bitcoin is a decentralized form of money that operates without a central authority. That means no banks, no governments, and no intermediaries. Instead, Bitcoin runs on a public, transparent network maintained by thousands of independent computers around the world. Anyone can participate. No permission is needed. This is part of what makes Bitcoin so powerful and so controversial. Before we begin, an important message: crypto assets are high risk and not regulated in the UK. You could lose all the money you invest. There is no consumer protection. This content is not financial advice. Always do your own research. To understand Bitcoin fully, we need to go back to its origin. In 2008, just as the global financial crisis was unraveling confidence in the banking system, a white paper titled Bitcoin, a peer-to-peer electronic cash system, appeared online. It described a way for people to send money over the internet without trusting a third party. This wasn't just clever, it was revolutionary. The white paper laid out a blueprint for what would later become the first successful implementation of blockchain technology. In simple terms, Bitcoin is built on a blockchain, a public ledger that records every transaction ever made. This ledger is distributed, which means every participant in the Bitcoin network holds a copy. It's secure, transparent, and tamper-resistant. What makes this possible is something called consensus. Unlike traditional databases controlled by one authority, the Bitcoin network uses a consensus mechanism known as proof of work to agree on the current state of the blockchain. This ensures that all participants agree on which transactions are valid, preventing fraud and double spending. Proof of work relies on a process called mining. Miners use specialized computers to solve complex mathematical puzzles. The first to solve it gets to add the next block of transactions to the blockchain and is rewarded with new bitcoins. This reward system is how new bitcoins are created and how the network remains secure without needing a central operator. This mining process isn't just about finding a solution, it's about competing. Thousands of miners around the world are racing to solve the same puzzle. The winner gets the reward, and everyone else starts again. It's energy-intensive and highly competitive, but it ensures the integrity of the blockchain and prevents bad actors from taking over. One of the key features of Bitcoin is its limited supply. There will only ever be 21 million Bitcoins in existence. This scarcity is programmed into the network itself and enforced by the protocol. Every 4 years, the amount of new bitcoins created in each block is cut in half, a process known as the halving. Over time, this makes Bitcoin more scarce and potentially more valuable. Bitcoin's supply cap is a direct contrast to traditional fiat currencies, which can be printed at will by central banks. Since 1971, when the US dollar was taken off the gold standard, governments have had the ability to expand the money supply without backing. Bitcoin offers a digital alternative, a form of money with a fixed supply and predictable issuance. This predictability is one of the reasons Bitcoin is often called digital gold. Like gold, it's scarce, durable, and not controlled by any single entity. But unlike gold, Bitcoin is easy to store, divide, and send anywhere in the world, instantly and securely. These properties have led many investors to view Bitcoin as a store of value, especially during times of economic uncertainty. Bitcoin's rise wasn't immediate. In its early days, it was mostly used by tech enthusiasts, libertarians, and cryptography nerds. The first real-world Bitcoin transaction happened in 2010 when someone paid 10,000 BTC for 2 pizzas, a moment now commemorated annually as Bitcoin Pizza Day. Back then, Bitcoin was worth fractions of a penny. Today, that same amount would be worth hundreds of millions of dollars. Despite its humble beginnings, Bitcoin steadily gained attention from more than just hobbyists. As centralized systems continued to disappoint, more people began to see the value in a system that couldn't be censored, shut down, or manipulated. For the first time, anyone in the world with an internet connection could participate in a global financial network without permission. Bitcoin's decentralized nature is made possible by its network of nodes, computers that store and verify the blockchain. Each node checks transactions for accuracy, rejects invalid ones, and helps propagate new transactions across the system. This distributed validation ensures that no single entity controls Bitcoin. Even if thousands of nodes were taken offline, the network would continue to function. The security of Bitcoin lies in its code, but also in its community. It's open source, meaning anyone can read the code, suggest improvements, or run their own version of the software. This openness is what makes Bitcoin trustworthy. It's not controlled by a company or a government. It's governed by consensus, where the community agrees on upgrades and enforces the rules of the network. Over the years, Bitcoin has survived countless challenges, from government crackdowns and exchange hacks to internal debates about scalability. In 2017, a contentious debate led to a fork in the network, creating a new coin called Bitcoin Cash. The original Bitcoin, however, remained dominant and continued to grow in adoption and value, largely due to its strong brand, stability, and security. Scalability has long been one of Bitcoin's most debated issues. The original design allows for roughly 7 transactions per second, far fewer than payment giants like Visa. To solve this, developers proposed solutions like SegWit and the Lightning Network, which make transactions more efficient or move them off-chain while still benefiting from Bitcoin's security. The Lightning Network is especially promising. It allows users to open payment channels with one another and transact instantly, with near zero fees. These off-chain transactions are settled on the main blockchain later. For everyday use, like paying for coffee, Lightning could make Bitcoin practical and fast, without compromising decentralization. While Bitcoin was initially envisioned as digital cash, its use case has shifted over time. Today, many people see it as a store of value, a way to protect wealth from inflation, currency devaluation, or capital controls. In countries with unstable currencies, like Venezuela or Lebanon, Bitcoin has provided a lifeline to citizens who can't trust their local banks. This role as a hedge against inflation became especially relevant during the COVID-19 pandemic, when governments around the world printed trillions of dollars to stimulate their economies. As fiat currencies lost purchasing power, Bitcoin, with its fixed supply, surged in demand. Institutional investors, hedge funds, and even public companies began to allocate Bitcoin to their portfolios. Perhaps one of the biggest shifts in perception came when major companies like Tesla and MicroStrategy started buying Bitcoin for their balance sheets. That sent a signal to the market: Bitcoin wasn't just for retail speculators anymore, it was becoming a legitimate asset class recognized by serious financial players. The narrative began to shift from fringe experiment to financial revolution. As institutional interest grew, so did the infrastructure around Bitcoin. Exchanges became more regulated and user-friendly. Custodial solutions were developed to meet the needs of large investors. Financial products like futures, ETFs, and trusts allowed traditional investors to gain exposure to Bitcoin without directly holding it. This financialization helped stabilize the market and brought new levels of credibility to the space. Despite growing acceptance, Bitcoin remains a highly volatile asset. Its price can swing dramatically in short periods, driven by news events, investor sentiment, and macroeconomic trends. While some view this volatility as a sign of immaturity, others see it as the natural result of a young and rapidly evolving market. Over time, as adoption grows, many believe this volatility will gradually decrease. One of Bitcoin's most important features is its transparency. Every transaction ever made is recorded on the blockchain and can be viewed by anyone. This public ledger ensures accountability and allows anyone to verify the flow of funds. However, this transparency doesn't mean Bitcoin is fully anonymous. In fact, it's better described as pseudonymous. Addresses are not tied to real names, but transactions can be traced. To enhance privacy, Some users adopt tools and techniques like coin mixing or privacy wallets. Others migrate to privacy-focused cryptocurrencies like Monero. But for most users, Bitcoin offers a reasonable balance between openness and privacy. Law enforcement and blockchain analytics firms can and do trace illicit activity, which has helped to reduce criminal use over the years. Regulation is another complex topic. Governments around the world have taken very different stances on Bitcoin. Some, like El Salvador, have embraced it completely, even declaring it legal tender. Others have banned it outright or severely restricted its use. In most developed nations, Bitcoin is legal but subject to strict financial regulations, including tax reporting and anti-money laundering requirements. In the UK, for example, crypto assets like Bitcoin are considered property for tax purposes. Investors must report capital gains when they sell or exchange their Bitcoin. Platforms that offer crypto trading must register with the Financial Conduct Authority, FCA, and adhere to anti-money laundering standards. This regulatory clarity is helping protect consumers, but it also adds complexity for new investors. Still, the fact that Bitcoin continues to operate globally, 24/7, without interruption, is a testament to its resilience. It doesn't care about borders, politics, or regulations. It simply follows code. That's why many call it money for the internet or the most powerful monetary network in history. It's neutral, open, and available to anyone, regardless of nationality or background. One of the biggest shifts in Bitcoin's ecosystem has been the rise of self-custody. More users are learning to take control of their coins rather than leave them on centralized exchanges. With a personal wallet and private keys, users can truly own their Bitcoin, no third party required. This aligns with the original vision of financial sovereignty, where individuals hold full responsibility for their assets. Education plays a critical role in this journey. Many people are still unfamiliar with how Bitcoin works, how to use a wallet, or how to secure their funds. Fortunately, the Bitcoin community is full of passionate educators, developers, and advocates who continue to create free resources, tutorials, and tools to help onboard the next wave of users safely. The Bitcoin network itself is also evolving. Developers continue to propose upgrades through a process called BIPs, Bitcoin Improvement Proposals. These updates are carefully reviewed and adopted only when there's broad consensus. One major example is Taproot, a 2021 upgrade that improved privacy, scalability, and smart contract functionality. Bitcoin evolves slowly by design, prioritizing security and stability over speed. This conservative approach is one of Bitcoin's strengths. Unlike other blockchains that move fast and break things, Bitcoin moves deliberately. Every change is debated, tested, and peer-reviewed. This has created a level of trust in the protocol that few other systems can match. It's one reason why Bitcoin has remained the most secure blockchain in the world for over a decade. Security is at the heart of Bitcoin's design. Its decentralized architecture and proof-of-work consensus mechanism make it extremely difficult to attack. To alter the blockchain, a malicious actor would need to control more than 50% of the network's total mining power, a feat so costly and complex that it becomes economically irrational. This is what gives Bitcoin its reputation for being virtually unhackable. The importance of decentralization cannot be overstated. In a centralized system, a single point of failure can bring the entire system down. With Bitcoin, there is no single server, no CEO, no office that can be raided or shut down. The network is maintained by thousands of nodes spread across the globe. Even if some are taken offline, the rest continue running without interruption. Bitcoin's ethos of decentralization extends to its culture as well. The community is diverse, global, and often fiercely independent. Some are in it for the philosophy, others for the technology, and many for the investment potential. There are libertarians, technologists, artists, traders, and even environmentalists, all finding different reasons to support or question Bitcoin's role in the future of finance. The environmental impact of Bitcoin mining has become a heated topic in recent years. Critics argue that the network uses too much electricity, especially compared to traditional payment systems. Supporters counter that Bitcoin's energy use is transparent, increasingly renewable, and necessary to secure a truly decentralized financial system. Some even argue that Bitcoin can help accelerate green energy development by monetizing excess renewable power. To address concerns, Bitcoin miners are increasingly shifting toward renewable sources. In countries like Iceland and Canada, mining operations use hydroelectric or geothermal power. In the US, some miners use excess energy from natural gas flaring or solar farms. While the debate continues, the trend is clear: sustainable mining is becoming a competitive advantage in the Bitcoin ecosystem. Another important aspect of Bitcoin is its divisibility. While one Bitcoin may seem expensive, it can be divided into 100 million smaller units called satoshis, or sats. This makes it easy for anyone to own a fraction of a Bitcoin. You don't need to buy a whole coin, you can start with just £1 worth if you want. This divisibility helps make Bitcoin more accessible to people of all income levels. Bitcoin's open nature has also inspired a wave of innovation. It was the first, but not the last. Hundreds of alternative cryptocurrencies, known as altcoins, have emerged over the years, each attempting to improve on or differentiate from Bitcoin in some way. Some focus on privacy, others on speed, smart contracts, or energy efficiency. But despite all the innovation, Bitcoin remains the benchmark by which all others are measured. For all its complexity, Bitcoin is ultimately about one simple idea: putting the power of money back into the hands of individuals. It challenges the notion that we must trust central authorities to manage our wealth. Instead, it offers a system based on code, mathematics, and consensus. This vision has inspired millions of people to rethink their relationship with money. As we look to the future, Bitcoin's role in the global economy is still evolving. Will it become the new global reserve currency? A digital version of gold? A censorship-resistant payment rail for the internet? Or simply a hedge against economic instability? The answer may be all of the above, depending on who you are and how you use it. Bitcoin's price may rise and fall, but its impact continues to grow. It has sparked debates in Parliament, influenced global regulation, and forced traditional banks to reconsider their role in a digital world. It has opened up new economic opportunities for millions, from unbanked individuals in developing nations to sophisticated investors in London or New York. Bitcoin has also become a cultural force. It's been featured in mainstream films, television shows, and even art installations. Conferences dedicated to Bitcoin now attract tens of thousands of attendees. It has become a symbol, not just of financial freedom, but of resistance, sovereignty, and technological possibility. For many, Bitcoin is more than just an asset, it's a movement. The protocol's strength lies not only in its code but in the global community that supports it. Developers continuously refine and protect its codebase. Advocates help educate the public. Entrepreneurs build products and services around it. And holders, both large and small, vote with their wallets by continuing to participate in the network and believe in its long-term value. It's important to remember that Bitcoin is still young. It's just over a decade old, barely a teenager compared to the centuries-old legacy of traditional finance. Like any new technology, it will face growing pains, resistance, and reinvention. But it's already demonstrated an unprecedented level of resilience, outlasting countless predictions of its death and irrelevance. Education remains Bitcoin's greatest ally and challenge. With so much misinformation, hype, and fear in the space, helping people understand the fundamentals is key to broader adoption. Whether it's learning how wallets work, understanding the role of mining, or just knowing how to store coins safely, knowledge is what turns curiosity into confidence. For beginners, the best way to get started is slowly and thoughtfully. Buy a small amount. Move it off the exchange to a wallet you control. Watch how the network works. Read the white paper. Understand the ethos. Bitcoin isn't something you rush into, it's something you grow into. The more you learn, the more empowering it becomes. No one controls Bitcoin. That means no one can bail you out if you lose your private keys. There's no support line if you send coins to the wrong address. With freedom comes full responsibility. But that's the point. Bitcoin was built for those who want to take ownership of their money, not outsource it to a middleman. The path forward will likely include regulation, innovation, and greater integration into traditional systems. Central banks are now exploring digital currencies. Wall Street is offering crypto exposure. Even pension funds are beginning to consider it. Bitcoin's influence is no longer a question, it's a reality. The only question now is how fast the world adapts. But while others catch up, Bitcoin keeps doing what it's always done, producing a new block every 10 minutes, without fail, without permission, and without prejudice. It keeps rewarding those who secure it. It keeps empowering anyone with an internet connection. It keeps reminding us that money doesn't have to come from a central bank, it can come from code. Bitcoin may not solve all the world's problems, but it changes the conversation. It forces us to ask better questions. What is money? Who controls it? What are the trade-offs between convenience and control? It invites us to imagine a world where money is open, global, and incorruptible. And for many, that vision is worth fighting for. Whether you're here to invest, learn, build, or just explore, Bitcoin offers something rare in today's world, a chance to participate in something truly new. It's more than a trend, more than a price chart, more than a headline. It's a peaceful revolution, encoded in math, run by people, and open to all. So as you continue your crypto journey, remember this: Bitcoin isn't about getting rich quick. It's about reclaiming your power. It's about protecting your future. It's about building something better, together. Subscribe to Crypto Pulse for deep dives, tutorials, and objective insights into crypto's biggest trends.